हेलो हेलो।
हाँ, आलोक जी।
हाँ जी, गुड मॉर्निंग, गुड आफ्टरनून।
गुड आफ्टरनून,
कैसे
गुड
हैं
आफ्टरनून।
राकेश
कैसे
जी?
हैं आप?
बहुत बढ़िया। आप सुनाओ।
आपका वीडियो ऑन कर लीजिए जरा।
हाँ, मैं वीडियो ऑन करता हूँ, बस मैं थोड़ा लैपटॉप की सेटिंग कर दूँ आपके। यस सर, दिख रही है वीडियो ठीक?
हम्म, ये दूसरा किसका है, ये राशि?
और सुनाइए सर, कैसा चल रहा है?
सब ठीक चल रहा है। एक मिनट, आपकी आवाज थोड़ी कम आ रही है।
हेलो हेलो। हम्म, कम लग रही है? मेरी तरफ से फुल है एक्चुअली।
मेरी आवाज ठीक आ रही है आपको?
can hear them very
आप
clearly. There is no
आपकी तो आपकी तो एकदम क्लियर है।
मेरे लैपटॉप में प्रॉब्लम है।
नहीं, हमें बहुत क्लियरली आ रही है सर. वी आर नॉट फाइंडिंग
हाँ,
प्रॉब्लम.
वही कह रहा हूँ कि मेरे लैपटॉप में प्रॉब्लम ऐसा लग रहा है।
तो आप अपना म्यूट कर दो राशि के वहां से, पर फिर दैट
थैंक यू फॉर एडवाइस, शीतल।
दैट इज द ओनली वे.
हु आर द टू अदर राशिस? कैन यू आइडेंटिफाई योरसेल्फ प्लीज?
अभी तो 4-5 राशि खुल
No,
गए।
there is two. Oh yeah, there are four actually.
राशि, व्हाट हैव यू डन?
यहाँ पे ना 2 गिलास पानी ला के रख दे।
आलोक जी, बस अभी स्टार्ट करते हैं इन 4-5 मिनट्स।
श्योर श्योर, मैं ऑनलाइन ही हूँ, आप बता दीजिएगा।
हाँ जी, हाँ जी। So Rashi has made the mistake of sending her own link to a lot of people. Let me allow them to change their name. Guys, those who have joined in as Rashi Khatri, please rename yourself to your original name. Just one more minute and we start. So let's start. So Rashi, I'm going to start the recording. You are ready with your speech and the...
Yes, so just want to check if
Okay.
you can hear me. Okay.
Yeah. So we're starting, okay?
This meeting is being recorded.
Good afternoon, everyone. A very warm welcome to this new edition of GIA Knowledge Series session. Today, we are proud to feature Graphisads Ltd, a name that has emerged as a powerful force in India's advertising and media ecosystem. From its origins as a traditional advertising agency, Graphisads has strategically evolved into a diversified and integrated media company with a strong digital backbone. The company is a one-stop platform for advertising and communications, offering 8 in-house brand verticals and a fully developed proprietary brand suite that delivers end-to-end media execution to clients. Their business model is a compelling mix of vertical integration, digital transition, and long-term public and private partnerships. Has achieved a 35% revenue CAGR between FY21 and FY25, backed by multi-year government contracts and operational stability. At the heart of this transformation is Mr. Alok Gupta, the director of Graphisads. Alok sir is a graduate of the University of Birmingham and holds a postgraduate degree from SP Jain Institute of Management and Research. Graphisads expansion into digital, out of home, and high growth media tech segments. Alok sir also co-founded the G-Force Accelerator in collaboration with IIM Lucknow, nurturing a new generation of new media tech startups in India. Recognized in exchange for media's prestigious 40 under 40, Alok sir is known for building high performance teams and bringing innovation to Graphisads advertising. It's an absolute privilege to have him with us today. And we are also joined by Rakesh Arora, who's the founder of Go India Stocks, who will be moderating the knowledge series session with us. Over to you, sir.
Thank you, Rashi. So Alok ji, welcome to this podcast.
Thank you, Rakeshji.
So Alokji, I just wanted to start with, understanding the company. As I can see, there are like multiple verticals,
Yeah,
but I could figure out that, like OOH is one of the prime and I think the oldest vertical.
yes,
So,
yes.
how much I can see the revenue in FY24 was 54 crore from almost 30 odd percent came from this vertical.
Yeah.
So can you explain to us what it is? Meaning we all know hoardings and all that, but is it more than that? And how many sites we have? Which areas do we operate?
Sure, sure. First of all, thank you, Rakeshji, for hosting me on this Go India Advisor show. Graphisads is a 5-decade-old organization. I am second generation. So all the hard work was done by my father to, initiate the work at maybe around 50 years before. So we started as a media agency, primarily working to collect advertising for print media, newspaper advertising, and slowly and steadily we diversified into other businesses.
नमस्कार नमस्कार दादी तो वो रहा पैन कार्ड वो मिल गया आपके को मिल गया तो भेज
म्यूट कर दें राकेश जी बाकी
Huh? Guys, everybody, please be on mute.
yeah.
Yeah.
So yeah. So then after print media, we entered into outdoor media around 3 decades ago when Delhi's outdoor media was opening up. And that point in time, we got the opportunity to get into outdoor media ownership. So in last 3 decades of outdoor, today we have around 1,000 odd outdoor media sites which are owned by us. So in that 1,500 are physical, static in nature, which are from various municipal corporations, and 500 are from again from municipal corporations, but they are digital in nature. So over a period of time, we are, it's a conscious effort to get into digital outdoor media. And as you asked, that outdoor media today in our business consists of three parts. It's static outdoor, it's digital outdoor, and it's outdoor trading, which we do on a pan-India basis for our clients. So
Okay.
that together forms the outdoor revenue.
Mhm. So Alokji, can you explain to us how do we bid for these assets? And when you're saying municipal corporations, so obviously they would be bidding because government wants to be very transparent these days.
Yeah. I mean, it's a very sea change environment in the government with regards to outdoor bidding. So when my dad started working in outdoor at that point in time, there used to be open tenders, open auctions, and
Mhm.
it was a very different ball game. But now, all the corporations, I'll not even say 90%, but 100% of the corporations which are active in the big cities, I mean Delhi, Mumbai, Chennai, Calcutta, they all work on tenders, e-tenders. Everything is either auction or tender submission, and there is no scope for any kind of uh, misalignment with
So
anything.
what is the duration of the tender and how do you select the sites? Is it selected by municipal corporations or we have some say there?
So the sites are selected by municipal corporation,
Okay.
and year on year basis, I mean, depending on the tender frequency, they keep on tendering it. Usual tender goes from 5 to 8 years, which is a standard procedure in most of the authorities. Some of the tenders are now even going for 10 or 15 years, which are more like a build, operate, transfer model, wherein the outdoor media owner spends on the infrastructure, and then over a period of time, we get the payback to recoup our investments.
Acha. So that's what I was trying to understand because if you're doing a big board and now digital boards are
Yeah.
becoming
Yeah.
and it will be very cost intensive. So you really need long periods to recover that kind of investment.
True. So as soon as you leave your home, you in any city, so to say, you'll always be, bombarded with outdoor, so to say, or if you're traveling in metro, you're traveling in railways, airports, everywhere you'll see outdoor media, coming across. The good thing about is outdoor is that, it's non-intrusive in nature. I mean, we are not entering, we are there. It's up to the citizen to see or not, but as a media, it's very well patronized, um, and corporations are happy to give long-term contracts. Those who believe in this model, because what they are doing is along with giving outdoor rights, they are also building public facilities. So today, if you see in good cities, if you look at the quality of bus shelters, the quality of public utilities, you know, public conveniences, then they are very, very, very high quality in nature. And
Hmm.
that can only happen when you have a private player who is taking care of them on a daily basis.
Got it.
Because the service levels you require in maintaining these contracts is very high. I mean, I'm not saying that government cannot do it, but government already has a lot on its platter to take care of. So that's why the private players come in. I mean, it's the same as if you see NHAI or highways, which are now getting, privatized or on a BOT model. It's the same with outdoor.
Okay. So how does municipal corporation come out with what is the lease rental they would want to charge for any particular asset, and how do we also evaluate whether we'll be able to sell it? Can you give us your thought process on how does it happen?
So usually what happens at corporations, eventually it's a game of demand and supply. I mean, they look at the tenders which have gone in the past within that area, within that cluster, and how has been the performance, how many players have come in, and what should be the ideal price of that cluster. Obviously, what happens is that once a price is established in any area, then you cannot go below that. And if it's an auction that people usually hire,
Municipal corporation का तो it is very clear. Last year इतना, now 5% more, 10%
it's
more.
the same with everyone, Rakesh ji. Even as business owners, our intent is also to maximize our revenues, and that's what corporations are also doing.
We don't fall into that bracket.
Yeah.
Either.
So everyone is in the same boat. They are
Okay.
doing it for the government. We are doing it for our own.
Okay.
Yeah.
So, from a customer point of view, how are they able to evaluate what is the benefit they're getting from these kind of hoardings? I mean, obviously, you are passing by, and if it is on a bridge next to the red light,
Yeah.
you're going to stop and look at it.
Yeah.
But how do the customers calculate ROI, and how do they bid for our assets?
So there are many factors which go into pricing of out of home, and there are many kinds of customers who are there in the market. So if you look at the major clientele which is spending on out of home, first category in any city would be real estate. I mean, if you look at it, all the builders, all the big players today want a pie of the outdoor media. And the other one is government. And the third category, which is very active, but it's not really visible, is hyper local retail. So what helps outdoor is that it's very hyper local in nature. So if you have a showroom opening, if you have a college, if you have a university or a school, then you can easily cover 5 to 7 kilometers of that vicinity through outdoor. No other media has the opportunity to reach out to such audience. Obviously, social media, you can do a lot of geotagging, but then outdoor helps in building impact. It builds trust for the clients, which usually spend regularly on outdoors. And for real estate, it's all about impact at the end of the day. If there's a project launch going on, then it's their prerogative to fill the city with the campaign, with their creatives. For government, it's more about the reinforcement of the schemes, which they are already spending a lot, so that even the last mile, the last strata of economy or the consumer is aware about that scheme, and it enrolls themselves through
Okay.
outdoor or through different media.
So Alokji, when you bid any tender comes in, is it for like 10 billboards in defense colony, or is it like individual billboards everywhere, or how does it happen?
So it's a very customized thing now. Somewhere it's a cluster which comes on tender, and sometimes it's single unipole, single roads which come. Earlier, it used to be big clusters, but over a period of time, the cluster size have gone down, because what we are seeing is that every area has its own premium, every area has its own niche. So that's why corporations also realize that if we try and shorten the tenders, if we reduce the number of media, then we might get more chances of people bidding for that. But if you look at other areas like airports, or metros or railway stations, then they usually prefer that, complete airport should go to one player, so that there's no hassle of dealing day in and day out. It's the same with metro. It's the same. I mean, railways today has 3 or 4 players per railway station. But I mean, every media owner today have their own niche on which they are progressing
Okay.
with.
So do we have to put in some bank guarantees or EMDs to get these tenders? And if you can give us a little bit about, a pricing of a billboard at a strategic location.
Yeah. Obviously, the whenever you're working with the government, I mean, it's a given that the securities have to be there. It can be in shape of EMDs or bank guarantees, and they're safe with the government until and unless the tenders get finished. Because MCD or any corporation for that matter, they are also looking at their security. I mean, they don't want players to, bid for tenders at a rational price and then leave after 3 months, because then their annual plans also suffer because of that. So for any tender, so to say, there is a decent security amount which goes into government accounts.
So for these 1,000 odd boards that we have, how much is the EMD which is stuck with the government? What amount
So
do you
yeah,
remember?
I won't say it's stuck with the government, because that's a SOP, that's a standard operating procedure and that's a part of our business plan. But today, if I can recall more or less, then I think around 5 to 7 crores of our working capital would be stuck or invested with the government in some way or the other.
Achha, okay, got it. And from a consumer point of view, uh, their contracts would be smaller contracts, like
Yes,
shorter
yes,
contracts.
yes. Yeah. Their contracts are very small in nature. So if we are getting for a 5 to 7 year contract from a corporation, today a typical client usually gives a booking of 1 month, at max 3 months. So
Okay.
there are very rare bookings which go on for 1 year. Uh, and the pricing is also it's the same, follows the same dynamics. Obviously, if someone is booking for an year, then there are a better chance for negotiation with them. But standard operating is 20 days to 1 month now.
Okay. And so for government, we pay every month in advance, or do we get like 2, 3 month period to pay for? How does it happen?
No. Government loves to take everything in advance.
Okay.
So, and again, it's SOP. So all the license fees and everything goes in advance. Securities are advance, and obviously after the client's month cycle is completed, then the GST is also deposited on the same, and the payments from clients are usually in 3 to 4 months, which are
Okay, so payment comes to us after 3 to 4 months from client side,
yeah.
but here we pay advance every month, or it is every
Advance.
quarter, or how is it goes?
So in some case it's quarterly advance, and in some case it's monthly advance, depending on
Achha.
the corporation.
Okay.
I mean, there is no standard set all across India.
So the working capital would be like from 3 month to 6 month.
Yeah. For
Mm-hmm.
outdoor, we usually factor in 5 to 6 months of working capital for any project. So whenever we bag a new project, then the investment required is pretty decent.
So I was, saying that the revenue growth in this segment has not been that great. It's like 45, 50 crore, now 54 crore. It's not really going leaps and bounds. Obviously, maybe you are stuck in one region or one area. If you go to another area, maybe the growth might come. So, what is the outlook here? And
So as of now, if I talk about Delhi NCR only, then we have a lot of miles to cover within this area. I mean, in last 6 months, I would say January 25 onwards, we have literally doubled our inventory.
Mhm.
So we have taken new contracts from various corporations, and some of them are already active, some of them are already live, and some are in process of getting live. So the numbers that you see historically and the numbers which will come this year, we are expecting that there should be a very, very decent change in that.
Mhm.
So going to a separate city or separate state, so to say, comes after a very, after a very long time. It might be an opportunity for us to go to another state. Here,
Mhm.
I would like to mention that, outdoor media is a lot like real estate business. So I usually tell my clients also, and those who have limited knowledge about outdoor, that outdoor media owners have to day in and day out work with the municipal corporations, and working with various municipal corporations in various cities. It's a very difficult task.
Mm.
It's the same with real estate. Wherever you are placed, wherever the builder is stationed, there they can do 10 projects, 15 projects. But
Mm.
going into 10 cities just chokes the bandwidth. So
Correct.
that's what our intent is. First, to look at Delhi NCR in a big way, which we've already started doing, and we're getting great response from our clients. So we are in the process of consolidating media here, and then we'll think of moving to other cities if at all.
Sure. So what is the kind of this 54 crore can grow to how much in next, say, 4 to 5 years? What is the kind of demand and what would be our market share in this area?
So when we're talking about Delhi as a market, then 54 crore uh, from a Delhi market perspective will be a very minuscule number, so to say,
Okay.
because the problem with outdoor is it's a very fragmented market. I mean, all over India, if you look at it, there might be more than 5,000 odd media owners
Oh.
which are there. So we are one of the biggest, but still there are a lot of miles which have to be covered. So as has been the case with our past growth, we are looking forward to grow on the same lines. And the growth in outdoor happens two ways. First is whether you acquire more media, which we are already doing, which we've already done. The other is to how to we can better work on the occupancy levels of the existing media. So that is also a very big scope for us to get
Mhm.
into. And that is where we can easily achieve 15 to 20% growth only by better occupation of the current media.
Okay.
And if I add new contracts, then it's completely
Okay.
incremental, big increment opportunity.
So good that you answered that way. I wanted to ask, what is the break-even, occupancy level, and where are we right now, and what kind of margins we make on this kind of business segment?
So Rakeshji, there are two ways to look at business. It's very easy for any media owner to bid and take contracts at a exorbitant price.
Hmm.
मतलब पैसा लगाया और आग लगाई, बहुत आसान है. मतलब महंगा
Mhm.
कॉन्ट्रैक्ट उतारना तो बहुत ही आसान है. Our intent today is to work, and that's what the policy has been since last 30 years in outdoor, that we have to bid for profitable contracts. We might be conservative in nature, but then profit is something which we cannot sacrifice on.
Mhm.
क्योंकि टॉप लाइन के लिए काम करना तो सैनिटी है, मतलब इवेंचुअली इट्स द बॉटम लाइन दैट counts,
Mhm.
and that's
Correct.
what we have always looked for. So on an average, if I talk about gross margin percentage in out of home business, if a media owner is working below 50 to 60% of gross margin, uh, then they are in a high risk business.
Mhm.
If I'm talking about outdoor media ownership, obviously when we come to outdoor media trading where we have to buy and sell, that's still a 15 to 20% gross margin, but ownership, easily it has to be 50 to 55%.
And one thing I missed, what will the asset turnover for this? Meaning, what is the capital expenditure you do in this business to do like 54 crore turnover? How much capex we would have done?
So capex again comes handy when we get a new contract. So most of the capex happens at the initial time only. For example, we recently got a project of NDMC to Lutyens Delhi to renovate their 125 wall panels, which are public utilities. Now getting that contract and renovating them would easily be a 10 to 12 to 15 crore cost in capex for us. But since it's an 8-year contract and we have to maintain them over a period of time, the returns work out very well.
What would be the revenue on optimum utilization from this asset?
On this asset, and if I talk about my first quarter numbers, which obviously are internal in nature because I monitor them on a daily basis, we have roughly got around 70 to 75 lakhs per month revenue on only this project.
Oh, so
And it has potential to go easily cross 1 crore per month.
okay, so the
when we
asset turn is decent.
It's a very decent asset we've got by God's
Okay.
grace. And most of the projects in outdoor that we try and cater to or bid for are of similar nature.
Mhm.
So we've in this last 3 months only, we have recently taken over 3 more Vande Bharat trains from government railways. So
Mhm.
so the churning of getting new media has been very good for us.
So apart from the gross margin, so basically we spent 12 crore capex here plus another 5-6 crore of working capital.
Yeah.
So
We
around
spent-
18 crore we spent totally for the year, and we get a revenue of around 12 crore
Yeah, in the first year.
in the first year.
In the first year, we can on a conservative side, I can put it at 9 to 10 crores, and
Mhm.
second year it will be crossing 12. I mean,
Okay.
without a doubt.
So gross margin would be more like 6-7 crores from this per year. And
Yeah.
what would be the other costs which will come in? What kind of overhead cost or uh, operational cost do we need over here?
So there are operational costs about maintaining those media. I mean, we have to take care of the cleanliness, the maintenance, the wear and tear. Those are again around 2 odd crores per annum.
Mhm.
And OPEC, I mean, there is no incremental capex, so to say,
Okay.
because we already have
No,
a
OPEX, I'm asking about OPEX only.
OPEX
So
was around 2. Yeah.
2 crore.
Yeah.
So if we can make 5 crore on investment of 18 crore, that's a decent 27,
That's a
28%.
decent
Okay.
project.
Okay. So we understood this OHS to some extent. Coming to your biggest segment, which is creative and print media, where you have done 72 crore, almost half of your top line.
Yeah.
Now, can you please explain to us what it is? Because OHS is in front of us. Creative and print media is little bit abstract.
So print is also in front of you. I mean, the
Yeah.
morning newspapers that you read, uh,
Mhm.
the radio that you might listen to while traveling, the television that you might watch. Now the television pattern has gone down, but it's still there. So that business is usually for us, it's television and print and creative business. We work with a lot of clients in North India for their media releases. So we act as their advertising agency, and working with Times of India, Hindustan Times,
Mm.
Dainik Jagran, all the radio channels. So one of the leading agencies with the publications. And again, we started this business. We started as a media agency, and then we added various dimensions. So the relationships that we carry in this business are very long. I mean, clients have been with us since 20 to 25 years. So it's a regular churning business. I mean, it's not something that we have to work very hard to get client on, because the relationships are very strong. We understand clients, and clients also understand us. So.
Mhm. So what is the value add we do for the clients? I mean, why can't they go directly to Times of India uh, and other newspapers? I mean, everybody knows that. So what do we bring to the table?
See that it's a very, very good question. And one of the things that we bring to the table, or I would say that, agencies bring to the table, is that there is always a difference between sales and marketing. I mean, it's a very basic line that I'm saying. But when we are talking about sales, the main intent for any publication or any radio would be just to sell. their stuff to the client. Where agencies add value is that, first we have to understand client. We have to understand our client's client. I mean, who do they want to target? What is their target audience? And then we have to customize plans according to the behavior of client's client, so that our campaign is much more visible. And we have a bouquet of what, more than 50 odd newspapers, 10 radio TVs, hundreds channels to select from. Whereas if a client is talking to 50 newspapers, 10 radio channels, 500 television channels, obviously they don't have that bandwidth or capability to deal with the media themselves. That's where the agencies come in, and the good ones at that, they always try and add value with the client.
So I can see that you have, like video production, creative angle to it. So obviously,
Yeah.
when the client comes in, they might want all these things to be done.
So the content production, creatives, social media, event management, these are like verticals which we started, which we've actually worked very seriously in last 10 years. And again, it has only been organic requirement from our clients. Since we have elongated relationships, we have got demands from our existing clients only that, there is an opportunity to work on this front also. We trust you. Why not? Why don't you open event management? Why don't you do creatives for us? So it was a natural extension for us to get into it. And now most of these verticals are self-standing in nature. They are profitable in their own right. So the only one of the intent to open or diversify into these verticals was that our customer acquisition cost was nil. The same customer we offer various services to them.
So I saw that this vertical has been growing very fast. You kind of doubling almost every 2 year kind of thing. And Jatin is also asking this question whether it will remain the largest contributor to top line growth. So how do you think this segment growing? Meaning OHH, I'm assuming will grow at 15-20% probably. But can it sustain this high growth that we are seeing in creative and print media?
So we are very hopeful that outdoor will be an outlier for us, especially this year because of the contract that we got in last quarter of 24-25. So outdoor should be an outlier for us this year. Uh, at a very conservative level, I'm looking at 25 to 30% growth from outdoor.
Okay.
And media business, we have been very fortunate, I'd say, that after COVID, the growth in media has been very good. All the sectors across Indian industry have seen rapid growth in media, and we have been fortunate to be a part of it. So till such time that the economic headwinds are overall positive in nature, there is no looking back on media front also. I mean, the main clients that we work in media is real estate, it's government again, and as of now, there doesn't seem to be any hiccups in those markets. I mean, with the RBI also recently cutting rates by 50 BPS, the real estate market, which was kind of slackening, has got a decent booster dose.
Okay. Okay. So there's good insight for investors to look at real estate stocks probably. But so this, can you just explain the unit economics like we did for OHH? Um, so here, this 72 crore that uh, is it the total amount of work like advertising expenses incurred by our client plus our margins, or this is only our margins,
No.
our proportion?
This is a total business which we've done for our clients in this vertical last year.
Okay.
Yeah.
So client bill us and we kind of pay to the.
Yeah. So media bills us and we bill to the client.
Okay. Got it. So what would be the gross margins in this kind of business?
So in this business, usually the gross margins range from 12 to 15%.
Okay.
And it's a high volume business.
Mhm.
And
And
the working capital investment is pretty less.
how much is the working capital cycle here?
So usually what happens is that in most of the cases, we get decent credit from media. and our intent is to collect monies before payments. So,
Okay, so
so
it's
in a
kind
lot
of
of cases,
negative.
it might be a positive working capital cycle.
Okay, so it's so what kind of growth are we expecting here? What did you say? Should we expect same
No,
25
it's
30%, or it will like be?
no in this one. It might be a 12 to 15% growth this year
Mhm.
because see uh, over a period of time, our intent is to work on businesses which are more profitable in nature. So that's why while this volume is very good for us, it adds to top line. But again, at the end of the day, if I can generate more business in more business in verticals where we have decent margins, then obviously we'll be sleeping off well.
Mhm. Uh, let's take some questions. We have one question on where is margin better, digital media or OH?
So digital, I would like to qualify into two businesses. One is digital out of home, and one is digital media, which is social media and everything with regards. For us, the margins are better in digital out of home and out of home. Digital media is not something which we are very,
Okay.
which we look forward
No,
to.
but between OHH and digital OHH,
DOH.
do OH.
DOH, digital out of home, has much better yield and on margin than
But capex would also be higher there, right?
Capex is higher. Capex is higher, but then there's an opportunity to, play multiple clients at a given point in time.
Acha, so morning somebody can do, evenings not.
Yeah. And what is happening today is that, slowly and steadily that change is happening that, digital out of homes impressions per million or impressions per cost per impression, so to say, those terms are getting aligned with digital media agencies.
Okay.
So that's going to be a sunrise sector opportunity for us, sunrise business opportunity, wherein the digital agencies, they will be selling DOH. They will be integrating their CRMs, their CMSs with our screens, and they will be selling that media.
Mm-hmm.
So that's
See, we have companies like Apple India, etc., in that digital space where they do a lot of,
yeah. FL is into
tracking.
performance marketing and all.
I mean, these days you can't speak anything in front of your phone. It might,
It's already catching whatever you're speaking. So
So now I'm going to get a lot of ads for hoardings and all that.
I hope so. But you can contact us whenever you need them.
Yeah. So yeah. So let's see if there are questions. So Jatin is asking that majority of the growth was to come from outdoor segment. So Jatin, it's already been clarified that they won this large contract, and that's why this year they're looking at 25-30% growth in OH and 12 to 15% growth in the creative
In
and
the
print
media side.
digital media. What else is there? Margins here covered, and yeah. So now coming to other two, segments. So one is your events. Um, how does that tie in? Because events has a different, skill set.
Yeah.
So how does that tie in with our whole business thesis? And are we spreading ourselves too thin?
So as I told you that, the only reason to get into such, and I would rather call it a diversified, it's a related diversification rather than unrelated. Because at the end of the day, see, all the services that we are building are around media. I mean,
Mhm.
it's not that I'm supplying concrete, I'm not selling bricks or anything else to my builder. It's the media which I'm selling.
Mhm.
So there was an organic requirement of such clients and of clients, and that's why we built. And today we are in a very smooth ship because on an average we easily do events from ranging from 15 to 20 crores per annum. Obviously, with a focus, with a more focused approach, we can grow it
What kind of
every year.
events are we talking about?
So as of now, the niche or the specialty that Graphisads has is to do government events.
Oh,
So
okay.
our team last weekend was in Lucknow to do Aam Mahotsav. UP Aam Mahotsav. Honorable CM attended the same.
Okay.
Before that, they were in Odisha for another event. So on a constant basis, we keep on doing events on a pan-India basis.
So
And
does it come with an advertisement attached to it? Like if you're doing an
in some
event, obviously
cases,
you need billboards, you need
yeah,
all those stuff.
in some cases, print advertising or outdoor advertising is a part of it.
Mhm.
And then there are some clients, for example, there is a client Niftem in North India. For
Mhm.
them, we do creative, we do social media, we do print, we do outdoor, we do events. We do a 360-degree work of that client.
Okay.
So if we're talking about, growing a new vertical within the same client, then that's what's the reason behind opening.
So what are the margins in the event business that we make?
So event business at a gross margin level is around 30 to 35%
Okay.
business. Yeah.
And working capital would be high given these are government this thing.
Yeah,
So
working capital is decent in this because the investments have to be in advance. And again, the bank guarantees and EMDs go for the same.
everything, even though
Yeah.
they have to pay money, still they want bank guarantee from us.
Yeah. So that's the irony that, we have to spend on bank guarantees, EMDs, and then we have to spend on the event and then hope to recover payments timely. But that's a cycle, and I think payment recovery is not a big issue in events. We usually get paid within a couple of months. So that's
Okay.
fine. Yeah.
So coming to this digital thing, which is social media marketing and all that, I'm finding, young kids, 16, 18, they're claiming themselves to be social media digital expert. So, so what kind of energy we bring on to this?
So, Rakeshji, the challenge with social media has been that if you talk to any client, so to say, the stickiness of social media vertical is very less. I mean, no client is satisfied with social media. Their social media, their company's social media. No client is satisfied. You are in PR business. I can imagine how difficult it is to satisfy a client in PR. So we have, at a conscious level, stayed away from businesses where the client retention is very low. Because what we see is that, once there is there is something sour between us or client on anything, so to say, then the whole relationship gets impacted. And that's not which we are willing to, place a bet on. For us, the relationships, the trust that has been built over a period of time, it's much more important. So you're very right that today the kids, everyone is glued to their phones, their laptops. But even if I ask you which are the last 5 ads you would have seen on the Instagram in last 1 hour, the stickiness is very poor. The jargon that these social media companies have sold to the industry are very, very, very questionable worthy. It's just that no one wants to question because the industry has accepted. Today, I'm not sure how many people know this or no, but if you look at Instagram reel for 1 second, it is counted as a view.
Oh,
And that, even if you're scrolling through Instagram, that 1 second comes and goes, you don't know. But for Instagram, it's a view, and views are what is sold to the clients. So it's a
that
black
I'm
hole.
seeing in my YouTube channel. The average viewing time was like 6, 7 minutes on a 1 hour video. So obviously,
Yeah.
some people are doing a fleeting presence.
There are a lot of opportunities and challenges, but social media uh, is a different ballgame, and we don't wish to get into that.
Mhm. So I have two strategic questions for you. See, this industry is very fragmented,
Yeah.
and I'm also seeing it's very complex. It's not very easy to manage. You need a lot of investment in technology to be able to manage your inventory, to be able to sell it during the day. So one, what is our differentiation on technology? And number two, can there be a consolidation in this industry? Because eventually, with GST coming in and a lot of things happening, most of the other industries are also consolidating.
Yeah.
So, what are your views on these two, topics?
So when it comes to the tech stack or the technologies that are coming into play, then I would rather say that, technologies are already coming into play in digital out of home space. I mean, if you look at the content management systems, if you look at the programmatic media buying behavior that has started to get into outdoor, so we are also a part of it. All our screens run on CMS, our own CMS,
Mhm.
and ads can be played in real time. They can be uploaded, changed in real time, as and
Mm.
when required by the client. For a physical outdoor campaign, you might need a 1 day execution, but for a digital, you just need a 1 hour execution cycle. So that change has already happened, and obviously we are a part of it. Your second question was regarding the consolidation part. So I rather always look at everything from a Pareto's principle perspective. 20% of the players will hold 80% of the media.
Mm.
And that is true for every market. I mean, if we look at outdoor, then even in Delhi, in Mumbai, in Calcutta, so to say, top 4 or 5 players will be holding 80% of the inventories. And rest 80%, small players would be, holding on
Mm.
to the 20% inventory.
Mm.
So that 2080 can be a 1090 going
No,
forward.
but this 4, 5 in 80,
Yeah,
can it be 1, 2 in 80? 30, 40% market share?
that is highly unlikely, and that is highly unlikely
Mm.
because again, the reason for same is that outdoor in itself is very bifurcated.
Mhm.
So if let's say Delhi's outdoor is 100 rupees, then out of those 100 rupees, 20 rupees would be going to metro. 15 rupees would be going to railways, 25 rupees would be going to an airport, and rest 50 rupees would be split in Delhi streets.
Mm.
So you see the level of bifurcation it has and the media specialization that one requires to acquire inventory. Today
Mhm.
we have small players who are working only in Delhi metro, and which is fine. So,
Mhm.
so that's why consolidation for a single player to hold 70 to 80% of a market in Delhi or in any big city is highly unlikely. Though there are tier two cities where this has happened in the past, monopolies are there in outdoor. But slowly and steadily, what we see is that those monopolies are getting broken
Okay.
because the corporations eventually look to maximize their revenues.
Mhm.
The monopolies used to be there where there were less tenders. But
Mm.
now with the advantage of technology or GEM coming into picture or auctions, e-auctions, the monopolies are slowly getting
Mhm.
deconstructed.
Mhm. Okay. So, yeah, by the way, somebody asked about Vande Bharat, popular train,
Yeah.
preferred choice for everyone these days. So, what is the opportunity size in that, and what contract do we have?
So we started bidding for Vande Bharat in 2020. I think 2019, 2020 was our first contract. And over a period of time, the response that we've got for Vande Bharat, obviously it's an amazing train, whoever has traveled. And we are focusing on getting digital out of home media in those trains. So far we have taken contract for 6 Vande Bharats. And most of them are very good in nature, always full. And the routes that we have go to religious places. So Katra, Varanasi,
Mm.
Amritsar, Anandpur Sahib. So those routes are with us, and we've got very decent patronage of clients who have taken care of our revenues on those lines.
Mhm.
So we're obviously looking to add more inventory. Uh, and what we have observed over a period of time is that, outdoor works on a very granular level in terms of how you package it or how you sell it.
Mhm.
So today, a Vande Bharat is a very clean environment to operate in, or Lutyens Delhi is a very clean environment to operate in, and it's very easy to sell. Uh, so we're looking at contracts which are, which might involve high capex, but the sales get easy on those lines, and the
Okay.
revenues are more or less,
Mhm.
secured in nature. So that's what the intent is.
One question I had, how did you navigate the COVID period? Because that would have been a little bit disastrous for OH. Maybe
Yeah,
even,
yeah.
I'm not sure, print media, if it was working that properly. maybe initially at least. So, what was your experience and how did you navigate that period?
So COVID, I, I mean, I can only pray that no one has to face such a
That is true. That
period,
is for sure.
period again. And I remember that. So COVID, everyone had to sit in their homes,
Hmm.
and our businesses work when people move out of home. So literally, the business was shut for 3-4 months. Uh, the government supported at that point in time by, in some cases there was a waiver of license fee, and costs were reduced. But then obviously in businesses like ours or the service industry, the manpower costs form a significant chunk of the fixed
You have to pay the
costs,
guys whether they
and
work or
those
not.
have to
Yeah.
be paid.
Hmm.
So we had a discussion with staff. Obviously, everyone was on board. Somehow we sailed through that period. But I would say that Rakeshji, COVID was also a blessing in disguise for us, because those 2-3 months that we got out of business, so we actually sat down, we looked at our priorities, we figured out that there are some businesses, some clients which are not worth pursuing, which we should have closed 2-3 years ago, but now COVID gave us the opportunity to start afresh.
Okay.
So we always think of that period as our post-COVID as Graphisads 2.0, that it was a new start for us. Obviously, the diversifications or the related businesses like events and all picked up after COVID,
Okay.
and we had to be on our toes. So what we also added virtual events during that time. I still remember in December 2020 we did India's one of the biggest virtual events
Okay.
for Ministry of Science and Technology. That event got 5 Guinness World Records
Oh,
for our
wow.
client.
Mhm.
So I think everything which eventually happens is because of God's grace. So it was a great learning period. And talking from my dad's perspective, uh, he has seen businesses getting closed, and then he has had to restart. So not many people know, but in 1997 there was a ruling by Supreme Court, and that ruling suggested that hoardings have to be banned in Delhi.
Oh.
So on a single day in 97,
Mhm.
Delhi's outdoor media was finished.
Oh.
And the next morning you get up and you come to know that, what to do next. So he has been there, done that. For me, it was a very new experience. But obviously, when you talk to the elders, you talk to people with wisdom, then they guide you with their own set of learnings, so
Mhm.
which has helped.
So, Alokji, some serious questions.
Yeah.
Our EBITDA margin is dropping for 2 years, and Pranjal has also asked that.
Yeah.
So, what was the reason for it, and where should investor expect stable EBITDA margin?
So this year should be much, much better.
Mhm.
The reason, so to say, is that, last year, since our since our last quarter got heavy investments from us for capex for outdoor purposes. That's why we had to factor in a lot of costs, and that
Okay,
hurt
so,
our
so normally don't you capitalize this cost because they are like 8-10 year?
Yeah. We should have done that, but in the last balance sheet we booked them as costs.
So
So
how
that
much
was the
cost
reason.
we would have booked, which is related to capex in our operating expenses?
In that case, we would have booked around 5 to 7 crores of cost.
5 to 7 crore. So
Yeah,
basically another 4-5% EBITDA margin we could have.
it would have surely improved.
Okay.
And
So shall,
irrespective this
yeah,
year since the project is live, the revenues are already started coming in. So we are going to have a decent number. And
acha.
the year before that, we had some operating costs with respect to the IPO expenses,
Mhm.
which had to be factored in. So
So this year should we expect 10 to 12% or 12 to 15% range for margins?
we are very hopeful of 12 to 15%
Mhm.
range. And but like I always, my intent is to undercommit and over deliver. So on a public platform, the numbers can be very easy to float numbers.
Yeah, no,
But
we want a realistic
yeah,
or rather
so
conservative estimate
honestly
only.
speaking, 12 to 15% is a very realistic number.
Okay.
And we
Okay.
only wish to increase on that going forward.
And one last question on the balance sheet. What would be our debt? And do we have any limits which are unutilized, or do we have enough working capital to take care of us?
So we have debt of around 17 to 20 crores, so to say, in books. And that debt has also been recently taken to, go through these projects, just try and finish these projects so that they can be commercialized very quickly. When we're talking about outdoor media, if we have to get more contracts in place, or if we have to, bag more contracts, then sometimes we do require debts from banks. As of now, the limits are completely utilized
Okay.
because so much is happening. Over a period of time, I think within next 6 to 8 months, we might be looking at, selling some excess real estate on the books of the company and reducing those debt.
Acha, how much do we have those kind of assets which can be sold?
So the total quantum of assets is pretty decent, but we are looking at around a figure of around 3 to 5 crores, just because we might get a good yield in this market.
Okay,
And the
got it.
only reason is getting a good yield to sell.
And what would be the total value of the assets which can be sold eventually?
In Graphis books, I mean, today, if we look at only real estate, we would be having somewhere around, I mean, I'll have to check, but somewhere around 20 to 25 crores of real estate would be sellable.
And what is this real estate? How did we end up owning this kind of real estate?
So, yeah. So, in any market, so to say, at a national level, real estate, as I told you in the past, real estate is a big client for out of home. Today, 30 to 40% of our outdoor industry works on real estate business.
Okay.
And out of this 30 to 40%, I would say that 30% of 30%. So 10% of outdoor industry is real estate barters in nature.
तो फ्लैट आ गया आपको फीस की जगह.
So as a media owner, I have two options. Either is let my site be vacant, or the other option is work with our clients, look to optimize our inventory and how we can add value to their media plan. And there will always be some clients who do not have positive cash flow to spend on media. So the intent is positive. I mean, what we look for in a client is the credit worthiness, the intent to finish project, and the past history. If those things are in place, then having a real estate barter for our outdoor, it's okay to go ahead.
And what would be the book value of these assets?
So book value of these assets as of now might range around, because the acquisitions have been historical in nature. So book value might be somewhere 7 to 8 crores, 10 at max. And the sale value should be between 20 to 25.
Okay. So it's a bit of profitable barter, I would say that.
Yeah. So that's the intent. Not only the property appreciation, but also the occupancy of our media. So please understand that, we are a service business, something like a hotel or a airline. I mean, the day that airline travel happens, the seats which are vacant, they can't be, used in retrospective basis.
Correct.
So the intent is to keep our media 100% occupied. Obviously, the sales or the cash generation can happen later. That's a working capital issue.
So, Alok, you're doing rough maths, meaning we are 70 odd crore of market cap, 18 crore of debt. And if I subtract this 25 crore of asset that you're sitting on, what you're paying nothing for the company actually.
So that's not something that I'd like to comment on, because
Sure. So, anything, Alokji, we have missed you want to highlight before we close?
Uh, well, I think you've covered most of the points. As a business owner or as a promoter, I can only say that our focus and a renewed focus rather has been to capitalize our outdoor inventory and increase our profitability. And considering the projects that we have got or those which are in the pipeline, which I cannot comment because of uh, they're in various stages of closure, the future looks amazing for us. Rest, obviously, I'm sure the market always works on numbers. Uh, with the constant focus that we have on our balance sheets, the numbers should improve in next 2 to 3 years.
Thank you, Alokji. It was great speaking to you, and it's quite an eye opener to understand this business. Obviously, we go on roads and see contact Chitra. We just wonder who is this Chitra,
Yeah.
but now we know.
True. So that's what I tell my team, that whenever there is a contact displayed and it has our logo, then you guys are not working well.
Yeah.
So we should always be displaying a client's creative instead of our own.
Got it.
And
So,
that's what we work towards. So yeah.
thank you so much. Thank you so much for your time. Yes.
Pleasure. Yeah, one thing, Rakeshji, I just recalled was that last year or last year, we've also got a new business, another related business. So we acquired NCUI Auditorium in South Delhi.
Okay.
It's a 525-seater auditorium we
Mm-hmm.
acquired from government on a long-term lease. And now we are doing events there on a regular basis.
Okay.
So it's an event property management space. We have 6 halls and a big auditorium.
So, what kind of rental are we paying per year for that, and how long is the contract?
That's an 8-year contract, and we are paying around the total expense would be 2 to 2.5 crores per annum
Okay.
of that. So last year we got the rights after renovation. So in last 6 months only of last year. So this year onwards, we are looking at a good occupancy level in that also. And along with it, we are launching our own IPs in event space at that venue.
Okay.
So our first IP is actually from 8th to 10th of August. We are doing Celebrating India Film Festival. So we are targeting to make it Delhi's biggest film festival.
Okay.
And we've got great response from Bollywood and, government clients and Government of India to, hold such events here on a regular basis. So
So
that's
this, I was doing quick maths on this auditorium.
yeah.
Even if it operates for like half a year, probably we're looking at 7-8 crore of EBITDA just from this, possibly.
So the challenge, see, again, the Excel and PPT numbers look great. The
Yeah.
break even, the break even for such properties usually happen at around 20 to 25%.
Okay.
Yeah, and if we are able to achieve 40% this year,
Okay.
because well, literally it will be first full year of our operation.
Mm-hmm.
So if we are able to operate at 45%, then we're looking at a 2 crore margin on this property only. And obviously going forward, the occupancy numbers are going to rise.
Got it.
So
Because as soon as the occupancy goes up, the number would sharply
it's so
increase.
the costs are fixed in nature.
Mm-hmm.
I mean, the better the occupancy, the more sweat the asset
Mm-hmm.
gets.
And what about this film festival kind of thing? What numbers can it throw?
So film festival, we've got great traction. We're getting good people from Bollywood to attend master classes, to do events. Then we've got 700 plus films which have come in last 1 month. So our jury is screening that. The jury is from Mumbai, completely Bollywood-based jury. They are screening it, and we're hopeful that this event in itself should have a first year. It should be a 75 to 80 lakhs property for first year billing, but over a period of time, it has the scope of becoming a standalone 3 to 5 crore event.
Okay, got it.
And if we are able to execute at least 3 to 5 such events at this place,
Hmm.
then we are looking at another set of stable revenues.
Mm-hmm.
So Obviously, IPs initially take 1 or 2 years to get stabilized, but once they're done, then it's an annuity based business.
Excellent.
Yeah.
So, Alokji, very excited to hear all this.
Thanks.
All the best to you, and I'm sure we'll have a stellar FY26.
Pleasure. I'd love to host if anyone wants to come to Delhi and have a look at our facilities or meet us in person. That'll be an honor if anyone wants to understand more about our business. So
Surely. So, anybody keen? In any case, we'll be running these kind of side trips. So, be in touch with Rashi. And half of your guys' name is already Rashi, so you have everything matching. So go for it. So thank you, everyone, and thank you, Alokji.
Thank you. Pleasure, Rakesh ji. Thank you, Rashi, for taking the efforts. Thank you.
The recording has stopped.
So we'll just close the event.